to the Hurley Investments Market View Commentary for Monday, June 22nd, 2006. By way of business to start today, for those of you that don't know, Alan Greenspan died this morning. Made it to 100 years. That's my goal, so I'm going to give the man props. He died from Parkinson's. Did 18 and a half years as a Fed chair. In all honesty, critics blame him for the 2008 market crash. And in his own memoirs, he admitted regulatory mistakes that what he ended up doing to facilitated that crash. He's also, for those of you that might not know, he also coined the phrase irrational exuberance. So irrational exuberance can be coined by good old Alan Greenspan. But rather awful to see one of the legends pass away. Jim's there. He found out where we type. Those of you that don't know, you should be able to find the questions tab in a box with a question mark. And that's where you should be able to find it, somewhere on the right-hand side of the new box that they give us. Again, way to make it very uncomfortable and a pain in the butt for everyone. Let me see who's here again. Listen only attendees: Jack and Jim, Ron, Jonathan, Nathan, Victoria, Stuart, Russ, Mary, Ann. Ann's here for the first time. Ann, welcome. All right. A couple of questions that have come to me, and one of them is, Kevin, you keep talking about a short float. And back in the day, you would look for a company that had a short float, and you'll see that short float as soon as I click on my drawing utensil. Perfect, I got it. You find the short float right over here. It's pretty interesting because the short float is at 2.43% for Netflix. The shares that are short floated are 4.18 billion. It used to be if you were 1% over, it was a huge sign that, hey, you're going to have a short float covering sometime in the near future. The stock should pop. Reason why, the average volume last 30 days is only about 40 million. So looking at the short float, we have like 100 days of short float covering where people are going to have to buy stock to cover the short sale of those shares. It's very interesting because when I was looking at some of our positions, we have a huge amount of short float stocks. But for those of you that don't know, the short float indicates or signals a potential squeeze. It used to be anything over 1%. We now see a short float or a short squeeze being something along the lines of 2.5% to upwards to 5%. Now indicates that we have a stock that can move significantly higher as people buy back those shares to cover their shorts. So the definition, Short flow refers to the percentage of companies' tradable shares that are currently sold short but not yet covered. It's calculated by dividing the number of shares sold by the total number of shares, the float, multiplying by 100. It's pretty easy on the math for all this. The more important part, why is that short float important? A high short float often indicates bearish sentiment among investors, suggesting that many believe the stock price will decline. Potential short squeeze. When a stock with a high short float experiences positive news or buying pressure, short sellers may rush to buy back shares to cover their positions, leading to a rapid increase in the stock price. The phenomenon is known as a short squeeze. Identifying metrics, pretty neat. Short floats above 20%. Nowhere other than Investopedia can I find that number. Everything I see right now is somewhere between 2 to actually 7%. Catalyst for the short squeeze, strong earnings, product launches, unexpected buying activity. This is where the billionaires artificially inflate the stock price. It's kind of funny because sometimes they do it to each other. And I just kind of giggle or laugh. Some of the most recent examples, GameStop in 2021, it had a short float of over 100%. That's why the price went from 20 to 400. It's interesting because we believe that was a Reddit effect. It was new. Someone on Reddit saw that there were a ton of people shorting the stock, or that there was one significant person shorting the stock. And they put a group of people together, and all of a sudden they started buying the stock and it created a short squeeze. There was nothing fundamental about GameStop. The only fundamental point was how many people could you talk into GameStop about filling a short squeeze to let it run up to 400? Where'd all the smart money get out? Probably somewhere in that 3 to 350 range. Actually, I'm sorry. I think it was 378 that there was a sell trigger where millions of shares started to be sold on the open market. Do you think it's us, the retail people, that are going to get there? Nope. Makes no sense at all on how high it ran up. That is the advantage of a short squeeze. Something that's important about it, though, take your profits. Take your profits quickly. But I enjoy the conclusion here from Investopedia. Monitoring short float percentages is crucial for traders looking to identify short squeeze opportunities. If I can go back and take a quick peek at a couple of our positions, on some of these, we look phenomenal. Some of these that worry me that I'm not so worried about. Meta, short float of 1.47, 2.19 billion on an average volume of only 17. Good news, and Meta should move up high. Alphabet or Google L. Short squeeze on this one, 1.43, 5.8 billion. Average volume, almost 30 million shares. I like where some of our positions are sitting in regard to a potential short squeeze. I would look for the opportunity to see some quick movements in our positions at the end of the year. Kevin, why are we talking about the end of the year? It comes down to valuation. And I put some key tools here for valuation. It serves as a tool for investors and analysts to assess worth of business. Key takeaways. Valuation determines an asset's fair value using quantitative and subjective factors. It's funny how people always talk about valuation, and it's a perception. My thoughts on our Mag 7 or the Mag 19. Trends approved. Trends say they are going to lose half their value because they are spending their money on growth. We talked about this. Are the Magnificent 7, 9, 13, 17, 19, however many you group in there, are they value stocks or are they growth stocks? Most of us know that answer, right? These are growth stocks. These are not value stocks. I do kind of giggle. I giggle at some of these people that are saying, hey, they're overpriced. They're spending too much money on growth. They're buying all this bandwidth, all this AI data centers. They're this, they're that. Google just had their worst day in over a year. It's having its worst month in over 9 years, I think is what was reported by CNBC. They're the only Mag 7 that is showing growth in artificial intelligence within their business model. Well, Kevin, Meta's using AI to do phenomenally well as well in how they're putting things in front of you that you're going to buy, which is also true. But the difference until recently, Meta has been renting the space out. Meta has not been purchasing AI. Are all of them now starting to raise additional funds? Of course they are. Someone actually just mentioned some are going beyond cash flow and using debt for capital expenditures. That's nothing new. Growth stocks have always done that for the most part. Value stocks do not. The other thought on AI right now is it's a zero-sum game. There's got to be winners and losers. I think I've used this excuse a bunch of times. We thought that with entertainment. Yet what dummy has like 19? Discovery Channel, Netflix, History Channel, Apple TV, Paramount Plus, Prime Video, Discovery Go, Disney Plus, Xfinity Stream, Peacock, Hulu, Angel, Pureflix, Tubi, Vet TV, HBO Max, The Chosen, MGM Plus. I've got all kinds of garbage on my phone. As long as they're buyers for the data, or as long as they're using the data to increase profit margin, the trend should keep going. The trend is really your friend until it's not. But some of what's being said is absolutely ridiculous. Okay, a bunch of people asked me some questions on SpaceX. The IPO price was what? What was the IPO price? I love it. 135, bingo. So that means the people that participated in the IPO that bought their original shares in that $40 to $45 range are going to be rewarded almost triple. What was the opening price for the market? What was that opening price for the market? Anyone remember? And it can be a rough estimate, doesn't have to be exact. Anyone remember the opening price? Bingo. 176.04. That's what I remember as well. I think about it because the highest it went to was 225.64. So there was an opportunity. Very short-lived. SpaceX closed today down only $30.40, a loss of 16.43%, but it closed today at 154.60. And it's kind of interesting because here's my question to the group. What was supposed to be different for SpaceX? Well, it opened up, what, $2 trillion company or something like that? $2 trillion IPO? I mean, it only lost over $4 billion the previous quarter. What was supposed to be so special about SpaceX? 20% held for retail investors. They're going to keep a certain person. They also have certain times where they can get out. And Elon cannot sell his shares for a certain period of time. But the comment that was just made, 20% held for retail investors. So 20% was held for dumb money. Or are they smart? Someone asked me, man, we should be getting in at 220 because it's going to go up to like $1,000. Well, I'm pretty sure everything she bought at 220 got out for a loss very quickly. Someone just said, well, that's dumb for sure. It's very interesting. Here's where it's important. And a lot of people ask me about it. Why didn't we get into SpaceX and protect it? Well, it's an IPO. There are no fundamentals. There were no options. and the fact that in a week options are available, they are so mispriced that it's ridiculous. It's absolutely ridiculous. I brought up a chart. The top 10 IPOs over the last decade. It's interesting because here are the real numbers. Palantir and Zoom were the two winners. It actually were higher by a lot. Snowflake was also positive 12 months later by 27%. But look at the 1-year max drawdowns that you had to suffer in these different stocks. I remember Facebook, we waited a year to get into it. Really smart. Alibaba was so volatile, its 1-year max drawdown was 49%, Snap 56%, Uber 68%. You know what's interesting? SpaceX, by way of revenue and losses as a percentage, matches Uber on this list most closely. Snowflake had a 52% drawdown, Palantir 53%, DoorDash 47%, Twitter 58%, Zoom 40%, Airbnb 39%. Those are facts and figures. Those are some real numbers to think about when it comes to IPOs. A couple questions came in. Is it stalled because NASA has gone silent? No. It stalled because it lost $4.3 billion in a quarter. They raised 75, which actually turned out to be what, 83 billion? And half of it's to pay off debt. And the next half of it will be lucky to get it through the next 2 years of running its business. Well, they just got a new opportunity to make $150 million a month. That's interesting. That's nice. But $150 million more dollars a month is a tenth. When you add that up for 3 months, is a tenth of what they lost last quarter. They need 10 of those to break even. SpaceX isn't going to be for us. I'm saying this politely, but no one in this group is going to go spend $100 million. That's not fair to say. No one in this group will go spend, most likely, what was originally deemed at like $250,000 is going to be more like $1 million to go into space. Yes, there's opportunity with the satellites and SpaceX. You want to know one of the funniest things? We're going to put data centers in space because it's cold. But the ships will still get hot. They have to find a way to manufacture the movement of air to cool the chips. It's a hell of a long way to send your service rep to fix it. I can't see it. I can't make the numbers work on why data centers in space will really be profitable for SpaceX. They got to figure out how to make it work in the first place. Last question for today. that someone wanted me to answer was, Kevin, what about a recession? It seems like we're coming into a recession. And we have a pretty unique chart here that basically is saying, hey, if you just held on to everything, the last 6 months of a bull market will counteract or offset the losses the first 9 months of a downturn. I kind of giggle a little bit because, again, for some reason, I have a hard time making the numbers work. And they put it out here clear as day, right? The last 6 months taking some of these. Hey, it's going to be an 11-month loss. That somehow in a recession, it's a 10% loss. For a year, it's only 11% loss. Again, I disagree. Well, this is from the last 11 recessions, 53, 57, 2001, 2007, 2020. 2001 for 3 years in a row, it ended up to be a 20% loss. 2007 was a 38% loss. 2020 was a stealth 20% loss. If you have to go back to 53, 57, 60, 69, 73, 80, 81, 1990, it's like, guys, those are so far removed from real life. I don't know. What I can tell you, what is important, is your first 3 months are usually a 6% downturn, and your last 3 months are usually a 7% rise higher. That gives us 3 months to get puts on. June has been hard. June has been ridiculously hard. But we're not in a recessionary time frame yet. We're not where we have to worry about where we're at. Hey, we got Lee Maxwell in. Lee, just so you know, upper right-hand corner, there's a questions box with a question mark in it. That's how you're able to click on your ability to type questions in and talk to us. But the short answer is, what they're trying to say is, on average, if you take the last 75 years, which no one's been in the market for 75 years here, most of us should start looking at 2000, maybe 1990. You take those last 4, the numbers are significantly worse. But the point that does help us out, for the most part, we have at least 3 months to get puts in place. If we enter a recession, which we probably won't, the end of this year, we'll probably see something next year. we should have time to enter put protection before we have a problem. So for those of you that are worried about recessionary fears, you can believe these numbers, which say the last 6 months of a bull market, if you did nothing, will pay for the first 9 months in a downturn. If you want to pay attention to when most of us actively were investing, that's probably the last 25, 26 years. We have about 3 months, which should give us plenty of time because it takes about 20 minutes to fully protect a portfolio with puts, to call or trade if you want to add shorts on there, to throw maybe 2 sets of put to make more money on the way down than the stock's losing. There's a lot of opportunities with the way that we invest that protect you and your portfolio. Earnings this week, the big one is going to be Micron, Wednesday after the market closes. I've highlighted some of the big picture. Fed Chair Warsh signaled a hawkish pause, prioritizing price stability and offering no forward guidance on future rates. He might be the new Alan Greenspan that takes it to the next level. Fed Chair Warsh is reshaping federal policy communication, emphasizing shorter statements, fewer signals, and stronger inflation fighting credibility. Or another way to state that is he's going short-term trends and not telling you what might happen in the future. He's trying to say, for the next couple of weeks, I can tell you this, and I have no clue what's going to happen in the future. But we'll come to it as we need to. Summary of economic projections. These guys always are the worst. SEP also featured upward revisions on projections for 2026 PC inflation, rising to 3.6 from 2.7. Core PC inflation growing from 3.3 from 2.7, that are well above the Fed's 2% target for inflation. I kind of giggle because one of the things that will probably change, Warsh is going to make the new inflationary rate probably somewhere between 2.5 to 2.8. Mr. Warsh wasn't out to make any enemies today. His aim was to lay out a new vision for the Fed's management of monetary policy. And he did that just by saying as he's appointing a task force in each of the 5 areas that are centralized to the broad conduct of monetary policy. Fed's communications. We already know what that's going to be. Shorter term, he doesn't know long term. The Fed's balance sheet. We actually already know what that is because we can see the numbers all the time. The Fed's use and reliance on existing data sources. He's going to look at other forms of defining inflation. Productivity and jobs in the area of transformation. Nothing's going to change there. The Fed inflation frameworks. That's what's probably going to change from a 2.0 to a 2.5 to a 2.8. It's hilarious because, and everyone that's mentioned this is correct, he's not making enemies because he's dumbing down the Fed so that you don't see the extreme movements in our stock market based on simple phrases that are said. Mr. Warsh is steering the policy ship right now, and his first order coming out of port is to not pay lip service to the importance of delivering price stability, but to actually deliver it. Yet Fed communications are shorter and less precise. Nothing about the Fed's balance sheet will change because it's open data. Existing data sources are going to change. He's going to add some new positions in there. Productivity and jobs and transformation of AI, not much will change there. Then we're going to have new jobs and replace old jobs. Fed inflation frameworks is going to change and go higher. If you ask me, World markets end this week. It's lower. I forgot to input. Got to put in my charts. Come on, Kevin. I should know better. Dow Jones Industrial Average, still technically bullish, although it doesn't feel like it. The S&P 500. Right on the edge of becoming bearish, but still technically bullish due to the RSI. And then, of course, you have the laggard, where we invest a big portion of our money through the NASDAQ because it's been beating the S&P for a decade. Still technically bullish. So, as we look at your positions at Hurley Investments, protection is on. We started doing deep out of the money, 3 months out in time for bigger credit covered calls to take advantage of this time period where we have uncertainty. What's the uncertainty? Mag 7 companies creating bonds, creating sale of stock to put more money into buying AI. Yes, Nathan, I'll get to that. We're looking at some other things that we're doing just to be a little bit overprotective. Now, someone just asked, could you talk a bit about the bearish Micron trade that was put on last week? How it worked out? It didn't work out. We paid for protection through Micron losing a lot of its value for no reason. For every 10 contracts, we tried to stick on one 900, 800 bear put. It was a short-term trade that we made zero money on it. We basically got our butts handed to it. But that was our understanding of, hey, if it just lost 25% of its value, then we feel like we have to protect it. We're going to do something similar based on the earnings that we get on Wednesday. But in real life for Wednesday, our expectation is that stock should continue to go higher. Where do you think the S&P is going to end June? We think it's going to end June down. It's already down for the month, but we're probably going to see June down 3.5% for the month. I did not put earnings in here. What am I doing? Earnings, FedEx, KB Homes. We have Micron and Fuller Homes on Wednesday. We have BlackBerry and Darden Restaurants, I believe, on Thursday. No real information to come out this week. It's a news week. It's a news week before we hit next week. And just so everyone knows, next week, we have Monday, Tuesday, which is the end of the quarter. Wednesday, Thursday will be the beginning of the next quarter, the July, August, September quarter. And next Friday, the market is closed for Independence Day, 4th of July. So we have another 4-day trading week next week. Rolled out of the money puts closer to that the money. We've added covered calls positions for the summer doldrums. I found a lot of interesting articles since I've been away from you guys for a couple weeks. NVIDIA plans to raise at least $20 billion in its first debt sale since the start of the AI boom. Here's a great example of where companies are raising cheap funds. Elon Musk becomes the world's first trillionaire. SpaceX begins trading on the NASDAQ. Just some more information about SpaceX. I found this interesting, and it's funny because over the last 2 weeks, my local news source had a ton of interesting technology articles. Utah man says he can't get customer service from Apple because artificial intelligence is calling the shots. Here's another great example where we need to put artificial intelligence into where we can understand it. Unfortunately, my generation saw, I want to say Transformers, but that's not it. Dang it. Someone tell me, what's that movie with Arnold Schwarzenegger? Terminator. We saw Terminator. Artificial intelligence is far from becoming Terminator. Artificial intelligence still can't get us to the right spot or fix any problem that we have personally for me when it comes to Apple, car insurance, banking, credit cards. And what pisses me off most, help us find your account, your name, your birth date, your last 4 of your social security numbers. And what's the first damn question when you finally get to a real person 7 to 15 minutes into your call? Okay, to verify who you are, it's like, your artificial intelligence spent the first 3 minutes of the stupid call repeating to me. So your birth date is 05/05/1972. It's ridiculous at how frustrating artificial intelligence is right now. Yet we're getting it pawned off as it's going to take away people's jobs. Well, is it kind of? It has, although I'm pretty sure most of those people are hired back. I think we need to be putting things into perspective. This is a favorite one for me. Box Elder County finds a large majority, 71% of respondents oppose data center plans. Kevin O'Leary and O'Leary Capital is wasting roughly $16 billion on a 42,000 square foot acreage data center out in the middle of nowhere in Utah. That worked for poisonous chemicals and uranium and stuff that the military wanted to dump in the middle of nowhere when they could no longer do it in Nevada, so they did it out on the western deserts of Utah. Talk about stupid. 42,000 square foot data center where somehow they passed it on their voting with like 33,000 residents or 13,000 residents as they hid. And now Larry Capital is being framed for bribing the county official to get it on the ballot. That it will use twice as much of all the energy that Utah uses yearly. They can't use our EPA protected Great Salt Lake to cool this huge data center with zero infrastructure for sewage, for water, for electricity. What a joke. Interesting article about Warsh no longer using the dot plot system. Great article again on SpaceX options debut signals expensive and dangerous bets. I found this article, and I'm sorry because I'm putting this in here in just a little bit, but my wife smacked me upside the head. Invest like a woman, female investing habits examined. I teased my wife and said, we can't all invest emotionally. And again, she whacked me upside the head. The difference is their emotions don't allow them to take the bigger risks. For years, I told you guys, as I started this, I had to put up my trades on the wall so at any time my wife could look and see what we're investing, maximum risk, maximum reward. I put in there my adjustment strategies. Really interesting article that came across our local news about women's investing habits and their conclusion. In other words, invest like a woman. Very interesting article about the new Ford Explorer Tremor. Ford is killing it. Got out of the electric vehicle. Their next vehicle looks amazing. And then investors see Micron's earnings as a pulse check of the IA rally momentum. It's interesting because, again, local article, but we already know that they're going to sell out of every single chip that they can make. And they're booked for the next year and a half or 6 future quarters with buying every single thing that they can possibly make. The fear what's going to change is not their earnings, because they're going to slightly beat earnings. And again, I've said it for the third time now, sell every freaking chip they can make. The canceled orders will stop the runaway movement on Micron. The moment we hear a canceled order or a group of canceled orders, we're going to start taking your profits off the table. Questions, guys. What questions do you have for me that maybe I have not answered, but I should have answered? And Nathan, did I answer your question sufficiently on the bearish Micron trade that worked horribly, but that we felt was important to put on just to protect ourselves for an unexplainable drop of 25% in the stock price? Any questions that I can answer for you? Yeah. So are we going to put a protection on for Micron and the spreads? No. Our farthest out short call is a 33% drop in the stock. So we are not going to be adding prior to their earnings. We're not going to be adding a delta negative position, a bearish position to make money on the way down. You can say we kind of learned our lesson from the previous bearish position we just put on, but we have that 33% buffer. So we're going to choose to run earnings using the short side of our trade as our protection on our long side. So Nathan made a comment. It worked horribly, but Micron positions themselves, I don't believe, lost money for us last week. Is that correct? It was losing money for us the previous 2 weeks, but it's pretty darn nice how it recovers. So you are back to where you were in your Micron positions about 2.5, 3 weeks ago. So your positions actually gained maybe a little over the drop period, but we did put in a protective position, 1 per every 10 contracts, that we did not do well on. I think we lost 93% of the value of the position, roughly. Could be even a little worse. And again, when he made the comment, I believe we did not lose any money for us last week. In the position we did, but on the portfolios we did not. Last week was a pretty good recovery for us, and we actually handily beat the market for the 3rd week of June. S&P, well, actually we matched the market last week, so it was an up week for us in general. It was the 2nd week that we handedly beat the S&P 500 for June. Good questions, guys. Yes, I will definitely do that. You win some, you lose some. And if you'd like, I'll put this one on Brian. Unfortunately, it was a consensus between all four of us. Yeah, we should probably get some extra protection added on. Um, I think I might have skipped over it. In fact, I think I did. Just as something to remind you guys of, if you can, keep Bill Brandner and Phil Sorensen in your prayers for the next little while. I'm going to tease Bill a little bit here. Bill did not go into AFib, but he went into an A flutter, which he's trying to tell me he's not a fibber or a liar, but his heart had a bit of a flutter in it. I said, hey, that's probably because you have a very attractive wife. Your heart's supposed to do that. Phil Sorensen just finding some health issues. If you guys can, let's keep these two in your prayers for the next little while. These are two of the ones that started with me originally 22 years ago. Guys, have a wonderful evening. I'm going to work on getting this posted as quickly as I can for you. But in general, we like where the market should head in the next 6 months. We like our positions we're in because we've done some protection on them by way of short calls. We like where Micron's heading overall, probably closer to 1600 before it'll get down to 800. You're probably going to see a lot of your returns coming this year, more in the last 4 to 6 months of the year. I'm trying to delay so anyone else can ask any more questions if they want to. If not, guys, have a wonderful evening. Appreciate you guys being here with us. I hope the explanation of the short float for those that requested that was helpful. I hope the understanding of valuation and how it's an abstract number was helpful for you. Again, growth trends are still in line for most of our NASDAQ stocks. And hopefully I gave an example of SPCX, why it's more important for us to be smart on using your money in the stock market versus gambling it. Guys, have a wonderful evening. I appreciate you guys being here with us tonight. Jackie, glad you could get on and you could find that button. Lee Maxwell, we're going to kick you out, deregister you from the GoToWebinar, and then we're going to re-register you. So you'll have a new link coming to you via email that should make it easier for you to enter into our webinars. Guys, have a wonderful evening. Look forward to seeing you again in 2 weeks as Brian will take over next week. Have a wonderful evening, and I'll look forward to talking to you then. Bye-bye, everyone.